The market moves. It is a vast, ever-shifting ocean of activity. Like the great currents that circle our globe, it flows with a powerful, often unseen force. Sometimes these currents surge upwards, carrying everything with them in a great wave of optimism. At other times, they pull downwards, a steady and relentless tide of retreat. There are moments of stillness when the waters seem to churn without direction. But for the most part, there is a clear direction. This powerful underlying movement is what we call the trend. It is the market's fundamental truth, a force of nature that cannot be ignored. To navigate successfully, do not fight the current. A wise sailor uses it. In trading, the same holds true. The trend is your most steadfast friend. So, what is this force we call a trend? In its simplest form, a trend is a consistent directional movement in price over time, the market revealing its general inclination. We can observe three primary states. The uptrend, a picture of growth and optimism, higher highs and higher lows. Imagine a staircase. Each step is a new high, each landing a higher low. Conversely, a downtrend forms lower highs and lower lows, a market in retreat. Like descending steps, each pause is a lower high than the last. The third state is sideways, price oscillating between two boundaries. Trends manifest on any timescale, from minutes to months and years. The crucial skill: recognize direction, up, down or sideways, and let it guide you. Trading with the trend offers a profound and simple advantage. It's rooted in momentum. An object in motion tends to stay in motion. Markets moving one way tend to continue until they don't. A trend represents collective beliefs, thousands, even millions, acting together. That creates a river of capital, hard to stop. Swim with the current. Going against it is an exhausting uphill battle. Predicting sudden turns is fraught. Reversals are fast, unstable and rare to nail. Calling tops and bottoms is prediction, not observation, a costly belief. Be the patient observer, wait for direction, then join, shifting odds in your favor. No strategy wins every time. You're playing probabilities, the foundation of long-term success. You do not need a complex array of instruments to identify a trend. The simplest tools, those that stood the test of time, are best. They don't predict the future, they clarify the present. Two essentials: trend lines and moving averages. In an uptrend, connect significant lows, a dynamic support and angle of ascent. In a downtrend, connect significant highs, dynamic resistance. A clean break can signal weakening momentum. Moving averages smooth noise, 50 period, 200 period, revealing direction. Above a key MA confirms uptrend, below confirms downtrend. These tools are objective, either holding or broken, above or below. Clear inputs for sound decisions. Your time frame defines your world. It must fit your style, availability, temperament. A 1-minute trend is a different creature than a weekly trend. Day traders live fast. 1, 5, 15-minute charts, constant attention and swift decisions. Swing traders ride moves over days to weeks, daily and 4-hour, measured pace. Position traders and investors focus on weekly and monthly, patient, powerful trends. Larger trends are often more reliable, driven by deep fundamentals, less noise. Always be aware of the bigger picture. Zoom out before entering any position. Align with the higher time frame. It's the ocean tide. Smaller trends are just waves riding a tailwind. Check the main current first, then seek smaller entries that align. That's how you keep your edge. Once you identify a clear trend, the challenge is finding a sensible entry. It's tempting to jump in on a strong move. That's chasing the price. Instead, wait for a pullback within the trend. Logical support, your trend line, or a key moving average. Look for a simple signal. Volume pickup, MA bounce, or break of a counter-trend line. A candle with a long lower wick shows buyers stepping back in. Start small. Test the water. Add only if the trend proves itself. Pullback entries improve risk to reward, buying dips in uptrends, selling rallies in downtrends. Identify trend, wait for pullback, confirm signal, a structured, low-stress way to join the market's flow. The most important element is not finding winners. It's managing losers. Risk only 1 to 2% of your account per trade. It's a law, not a guideline. At 1% risk, it takes 100 consecutive losses to blow up. Extremely unlikely. Place a stop loss on every trade. Your safety net. In uptrends, stops go below recent swing lows. In downtrends, above swing highs. Never move a stop further away. Small losses are business costs. Big losses are discipline failures. Honor your invalidation. Accept, learn, and move on. Protecting capital comes first. The most damaging mistake is fighting the main trend. Standing before a speeding train. Always defer to the higher time frame direction. Overtrading is another trap. More trades rarely mean more profits. Never chase after a large surge. That's often maximum risk. Wait for a pullback to logical support. Let the market come to you. Be aware of major events. They can inject volatility, gaps, and erratic moves. Often, it's wise to avoid new positions right before key releases. Manage risk accordingly. We've explored a powerful idea. The trend is your friend. You can identify it with simple tools and choose timeframes that suit you. Enter and exit with clear rules, always managing risk first. Your task: one trend trade on paper or a demo to practice the process. Find a clear daily trend. Wait for a pullback on 1H or 4H. Note entry, stop, and exit plan. Then observe. See how patience is rewarded, win or lose, learn and refine. The market is flowing now. Be humble, be simple. Let the trend be your guide.